Let's get ready for the Nebraska real estate exam with 100 questions covering the state-specific laws, principles, and practices you'll need to know. And don't miss what's happening in the bottom corner. It could be key to your exam prep. We'll tell you how in a minute. Now let's get started.
Let's get started with a review of Nebraska real estate law and practice. Fair housing laws in Nebraska. Which protected class is recognized specifically under the Nebraska Fair Housing Act, but not under the Federal Fair Housing Act? Is it A, race, B, color, C, age, or D, ancestry? The answer is D, ancestry. The Nebraska Fair Housing Act includes ancestry as a protected class, which is in addition to those recognized by the Federal Fair Housing Act. This reflects state-specific priorities in housing discrimination prevention. What is the role of the Nebraska Equal Opportunity Commission in enforcing fair housing laws? Is it A, to provide housing to protected classes, B, to mediate and investigate discrimination claims, C, to grant real estate licenses, or D, to establish housing prices? The answer is B, to mediate and investigate discrimination claims. The Nebraska Equal Opportunity Commission is responsible for handling complaints and conducting investigations regarding housing discrimination. By doing so, it enforces the fair housing laws in Nebraska.
Have you noticed the code in the bottom corner? Next time you're stumped, take that code to birdsy.ai for immediate help and a free study session with Birdsy, your personal AI study partner. Plus, you'll get access to hundreds of additional questions, helping you move closer to passing your exam with confidence. The next time you're feeling unsure or stuck, give it a try.
What legal action can the Nebraska Equal Opportunity Commission take if it finds a housing discrimination case valid? Is it A, impose civil and criminal penalties, B, issue a public reprimand, C, file a lawsuit in state court, or D, revoke the offender's driver's license? The answer is C, file a lawsuit in state court. Upon validating discrimination, the NEOC can pursue legal action by filing a lawsuit in state court. This process helps uphold the law and potentially penalizes those who violate fair housing regulations. Which act would likely be considered discriminatory under Nebraska fair housing laws? Is it A, declining a rental application due to poor credit, B, refusing to rent to a family with children, C, offering free rent for the first month, or D, adjusting rent based on apartment size and amenities? The answer is B, refusing to rent to a family with children. Under Nebraska law, familial status is a protected class, making it discriminatory to refuse rental to families with children. This protection aligns with broader fair housing standards aimed at ensuring equal access to housing. If a housing provider in Nebraska wants to adjust their practices to comply with fair housing laws, which step should they take first? Is it A, implement a no-guest policy, B, review and update non-discrimination policies, C, increase rent by 10%, or D, limit tenant rights? The answer is B, review and update non-discrimination policies. To comply with fair housing laws, a housing provider should review and update their policies to prevent discrimination based on protected characteristics. This ensures adherence to Nebraska's legal standards and protects against potential lawsuits. Under Nebraska fair housing laws, which group is explicitly protected against discrimination that differs from federal protections? Is it A, military status, B, sexual orientation, C, marital status, or D, political affiliation? The answer is C, marital status. Nebraska fair housing laws include marital status as a protected class, which is not federally mandated under standard fair housing rules. What is a primary requirement for landlords under Nebraska's fair housing laws regarding reasonable accommodations? Is it A, allow any pet upon request? B, make modifications at their own expense? C, consider and respond to accommodation requests? Or D, provide free accommodation modifications? The answer is C, consider and respond to accommodation requests. Under Nebraska law, landlords must consider requests for reasonable accommodations to allow equal housing opportunities for people with disabilities, consistent with HUD's guidance. Real estate contracts in Nebraska. Which of the following elements is essential for a valid real estate contract in Nebraska? Is it A, a notary's signature? B, mutual consent? C, a legal advertisement? Or D, a due diligence addendum? The answer is B, mutual consent. A valid real estate contract in Nebraska must include mutual consent, lawful object, capable parties, and sufficient consideration, ensuring that all parties agree to the terms outlined in the contract. What is the statute of limitations for written real estate contracts in Nebraska? Is it A, 2 years, B, 3 years, C, 4 years, or D, 5 years? The answer is D, 5 years. In Nebraska, the statute of limitations on written contracts, including real estate contracts, is typically 5 years from the date a breach is discovered or should have been discovered. In Nebraska, which party typically pays for the title insurance policy ensuring clear title? Is it A, buyer, B, seller, C, lender, or D, real estate agent? The answer is B, seller. In Nebraska, it is customary for the seller to pay for the owner's title insurance, facilitating a transfer of a clear title to the buyer. The buyer pays for any lender's title insurance if necessary. Which of the following actions would constitute a breach of a real estate purchase agreement in Nebraska? Is it A, failing to supply a wood infestation report as required? B, providing a property condition disclosure? C, negotiating an extended closing date? Or D, including an earnest money deposit? The answer is A, failing to supply a wood infestation report as required. Failing to provide necessary documentation or adhere to agreed terms, such as those specified for inspections or reports, constitutes a breach of contract. These breaches may result in legal or financial consequences. What is the effect of an offer being revoked in a real estate transaction in Nebraska before acceptance? Is it A, the offer becomes void and cannot be accepted? B, the offer remains valid for 30 days? C, the offer converts to a counteroffer? Or D, the offer is valid until a witness is present? The answer is A, the offer becomes void and cannot be accepted. Nebraska law states that an offer can be revoked any time before acceptance, rendering it void and non-binding. This is a fundamental principle in contract law, ensuring offers aren't open indefinitely without agreement. In Nebraska, what is required for a written real estate contract to be legally enforceable? Is it A, the contract must be notarized? B, there must be a legal description of the property? C, both parties must reside in Nebraska? Or D, the contract must include a closing date? The answer is B, there must be a legal description of the property. Under Nebraska law, a written real estate contract must include a legal description of the property to be enforceable. This ensures clarity regarding the property involved in the contract. Which of the following best describes earnest money in Nebraska real estate transactions? Is it A, a legal fee required at closing? B, a sum paid to demonstrate buyer's intent to proceed with the transaction? C, a mandatory contribution to Nebraska's Real Estate Commission? Or D, a refundable deposit returned after the inspection process? The answer is B, a sum paid to demonstrate buyer's intent to proceed with the transaction. Earnest money in Nebraska real estate transactions acts as a deposit that indicates a buyer's earnest intention to complete the purchase, demonstrating seriousness and commitment.
If you're finding this helpful, please take a minute to like this video and subscribe to our channel for more practice exams, useful tips, and complimentary study sessions with Birdsy.
Disclosures required by Nebraska law. What is required for a seller to disclose known adverse material facts to a buyer in Nebraska? Is it A, a written statement signed by the seller and buyer? B, an oral disclosure during a property showing? C, an email sent only to the buyer's agent? Or D, a disclosure within the property listing? The answer is A, a written statement signed by the seller and buyer. Nebraska law mandates that sellers disclose known adverse material facts in writing. This ensures that buyers have full transparency regarding any issues that might affect their decision to purchase the property. Which of the following must be disclosed when selling a home in Nebraska? Is it A, presence of a haunted house nearby? B, presence of lead-based paint? C, amount of the seller's mortgage? Or D, the color of the interior walls? The answer is B, presence of lead-based paint. In Nebraska, sellers must disclose certain material facts, including the presence of lead-based paint, especially in properties built before 1978, due to federal laws aimed at ensuring health and safety. What is the purpose of the seller property condition disclosure statement in Nebraska? Is it A, to evaluate a property's market value? B, to inform buyers of the physical condition of the property? C, to list all minor renovations done on the property? Or D, to exempt sellers from inspection obligations? The answer is B, to inform buyers of the physical condition of the property. The seller property condition disclosure statement's purpose is to openly inform buyers about the property's condition, exposing any material defects or issues, thus facilitating informed purchasing decisions. When should the seller disclosure statement typically be provided to the buyer in Nebraska? Is it A, after the inspection period? B, at the closing date? C, before or at the time of making a purchase offer? Or D, after buyer's financing is approved? The answer is C, before or at the time of making a purchase offer. In Nebraska, the seller disclosure statement should be given to potential buyers before or at the time of making a purchase offer, ensuring transparency and supporting the buyer's decision-making process. Which entity oversees compliance with real estate disclosure forms and regulations in Nebraska? Is it A, Nebraska Real Estate Commission? B, Federal Housing Authority? C, Consumer Financial Protection Bureau? Or D, Nebraska Department of Housing? The answer is A, Nebraska Real Estate Commission. The Nebraska Real Estate Commission ensures that real estate professionals comply with state laws, including providing necessary disclosures to protect consumers in real estate transactions. What must a real estate licensee disclose to prospective buyers about a property in Nebraska? Is it A, racial demographics of the neighborhood? B, nearby schools and their ratings? C, present condition of the property? Or D, seller's motivation to sell? The answer is C, present condition of the property. In Nebraska, real estate licensees must disclose any known adverse material facts about the property's physical condition as required by the Nebraska Real Estate Commission. Which environmental hazard must be disclosed in Nebraska real estate transactions? Is it A, presence of lead-based paint in houses built after 1978? B, unremediated asbestos in the home? C, nearby geothermal activity? Or D, air quality index of the area? The answer is B, unremediated asbestos in the home. Sellers in Nebraska must inform potential buyers about any known environmental hazards such as asbestos, which can impact a property's safety and habitability as part of the seller property condition disclosure statement. Transfer of title in Nebraska. In Nebraska, what type of deed is most commonly used to transfer property ownership without any warranties or covenants? Is it A, quitclaim deed, B, warranty deed, C, bargain and sale deed, or D, trust deed? The answer is A, quitclaim deed. In Nebraska, a quitclaim deed is often used when transferring property ownership without guarantees about the title's validity. This is typically used in non-sale transactions, such as transfers between family members. Which of the following components is necessary for a deed to be valid in Nebraska? Is it A, warranty clause, B, signature of the grantee, C, consideration, or D, legal description? The answer is D, legal description. For a deed to be valid in Nebraska, it must include a legal description of the property, which accurately identifies the boundaries and location of the land being transferred. When a title is transferred in Nebraska, which document is typically used to ensure legal compliance regarding public record? Is it A, title insurance policy, B, grantor's affidavit, C, recording of the deed, or D, survey map? The answer is C, recording of the deed. In Nebraska, recording a deed is essential as it provides legal notice to all parties about the change in property ownership, ensuring the transfer's public record compliance. Which agency oversees the enforcement of real estate laws in Nebraska, including transfer of title? Is it A, Nebraska Real Estate Commission, B, Nebraska Department of Revenue, C, Nebraska Public Service Commission, or D, Nebraska State Treasurer's Office? The answer is A, Nebraska Real Estate Commission. The Nebraska Real Estate Commission is responsible for administering and enforcing real estate laws, including those concerning the transfer of title, ensuring compliance within the industry. What is the primary purpose of a title search during the transfer of title in Nebraska? Is it A, to establish the market value of the property, B, to assess property taxes owed, C, to ensure there are no legal encumbrances, or D, to negotiate terms with the grantee? The answer is C, to ensure there are no legal encumbrances. A title search is conducted to check for any legal encumbrances on the property, such as liens or claims, ensuring a clear title transfer by the grantor. What is a necessary element for a valid transfer of title in Nebraska? Is it A, the signature of the buyer, B, a written deed, C, an appraisal report, or D, a title insurance policy? The answer is B, a written deed. A valid transfer of title requires a written deed according to Nebraska real estate law. This deed must be delivered and accepted to complete the title transfer. Under Nebraska law, what must occur for a deed to be officially recorded? Is it A, the deed must be notarized, B, the buyer and seller must be present, C, the mortgage must be fully paid, or D, a home inspection must be completed? The answer is A, the deed must be notarized. In Nebraska, notarization of a deed is crucial for its recording. This ensures that the signing parties' identities are verified, offering legal protection.
Notice the code in the corner? When you're stumped by a question, enter it at birdsy.ai for immediate help. Enjoy complimentary study sessions and access to hundreds of additional questions to help you pass your exam with confidence.
Earnest money and escrow in Nebraska. In Nebraska, what is the purpose of an earnest money deposit? Is it A, to fulfill down payment requirements, B, to show the buyer's good faith in purchasing the property, C, to immediately transfer ownership of the property, or D, to guarantee loan approval for the buyer? The answer is B, to show the buyer's good faith in purchasing the property. Earnest money is deposited to show a buyer's good faith and serious intention to complete the purchase. It's held in escrow until closing or the transaction is canceled. Who typically holds the earnest money deposit in a Nebraska real estate transaction? Is it A, the buyer's real estate agent, B, the seller directly, C, a neutral third-party escrow agent, or D, the buyer's lender? The answer is C, a neutral third-party escrow agent. In Nebraska, earnest money is generally held by a neutral third party, such as a broker or title company, until the completion or cancellation of a real estate transaction. Under Nebraska law, what happens to the earnest money if a real estate transaction is canceled due to the buyer's breach of contract? Is it A, it is automatically refunded to the buyer, B, it is forfeited to the seller as liquidated damages, C, it is used to pay the buyer's closing costs, or D, it remains in escrow until a court decides? The answer is B, it is forfeited to the seller as liquidated damages. When a buyer breaches a purchase contract in Nebraska, the earnest money is often forfeited to the seller as liquidated damages, as outlined in the contract terms. If a real estate transaction fails because the seller cannot deliver clear title, what typically happens to the earnest money in Nebraska? Is it A, the buyer forfeits the earnest money, B, it is returned to the buyer, C, it is split between buyer and seller, or D, it is applied to the seller's closing costs? The answer is B, it is returned to the buyer. If a Nebraska real estate transaction fails because the seller cannot provide clear title, the buyer usually receives a refund of their earnest money per the contractual obligation to deliver marketable title. According to Nebraska regulations, within how many days must a broker deposit earnest money into a trust account? Is it A, 1 day, B, 2 business days after contract acceptance, C, within a week, or D, immediately upon receipt? The answer is B, 2 business days after contract acceptance. Per Nebraska real estate law, brokers must deposit earnest money into trust accounts within 2 business days following contract acceptance, ensuring proper handling and compliance with state regulations. In Nebraska, how should a broker handle dual representation regarding earnest money deposits? Is it A, deposit earnest money without informing the parties, B, maintain separate trust accounts for each transaction, C, disclose dual representation and follow instructions from all parties, or D, consult legal counsel before making any decisions? The answer is C, disclose dual representation and follow instructions from all parties. Nebraska law requires brokers to disclose any dual representation in a transaction and to handle earnest money according to the agreed-upon terms by all involved parties. When is earnest money typically released from escrow in a Nebraska real estate transaction? Is it A, upon receipt of the purchase agreement, B, after the closing of a transaction and all conditions are met, C, when the buyer secures financing, or D, following a property inspection? The answer is B, after the closing of a transaction and all conditions are met. Earnest money remains in escrow until closing or both parties have fulfilled all conditions of the sale as stipulated under Nebraska real estate law. Nebraska real estate taxes. What is the role of the county assessor in Nebraska real estate tax processes? Is it A, assessing property value for tax purposes, B, collecting real estate taxes, C, setting property tax rates, or D, issuing tax liens on properties? The answer is A, assessing property value for tax purposes. The county assessor in Nebraska is responsible for valuing properties to ensure that they are taxed fairly. This role is crucial in maintaining equitable taxation across the state. In Nebraska, which governmental body is primarily responsible for establishing property tax levies? Is it A, local school districts, B, county boards, C, the state treasurer, or D, city councils? The answer is B, county boards. In Nebraska, it's the county boards that have the authority to set property tax levies. They determine the necessary revenue for funding essential local services such as education and infrastructure. Which Nebraska law governs the allocation of property taxes collected within the state? Is it A, Nebraska Property Tax Division Statutes, B, Nebraska Budget Act, C, Nebraska Tax Equalization and Review Commission, or D, Nebraska Revenue Act? The answer is D, Nebraska Revenue Act. The Nebraska Revenue Act includes provisions that govern how property taxes are distributed among the various governmental functions and jurisdictions, ensuring funds are allocated appropriately. What is a key deadline for property tax payment in Nebraska to avoid penalties? Is it A, March 1st, B, April 1st, C, June 1st, or D, December 31st? The answer is A, March 1st. In Nebraska, the first half of property taxes must be paid by March 1st to avoid late penalties. This is part of the structured schedule for tax payments to ensure local services are funded. How does Nebraska handle delinquent property taxes? Is it A, issuing tax deed immediately, B, imposing penalties and interest, C, foreclosing the property, or D, selling the property at auction instantly? The answer is B, imposing penalties and interest. Nebraska law imposes penalties and interest on delinquent property taxes to encourage timely payment. The state allows a redemption period before pursuing other actions like property sales. What is the primary purpose of Nebraska's homestead exemption? Is it A, to increase the tax revenue for counties, B, to reduce property taxes for qualified homeowners, C, to determine the fair market value of properties, or D, to adjust property tax rates annually? The answer is B, to reduce property taxes for qualified homeowners. The homestead exemption reduces property taxes for certain qualifying homeowners, such as seniors and disabled individuals, by exempting a portion of their home's assessed value from taxation. Which document outlines the valuation of real property for tax purposes in Nebraska? Is it A, warranty deed, B, assessment notice, C, quitclaim deed, or D, property tax bill? The answer is B, assessment notice. The assessment notice is sent by the local assessor's office to notify property owners of the valuation used to determine their property taxes. It allows for appeals if owners disagree with the assessed value. Nebraska Real Estate Licensing and Regulation. What is the primary role of the Nebraska Real Estate Commission? Is it A, to set property tax rates, B, to enforce real estate laws and issue licenses, C, to provide loans to real estate developers, or D, to mediate property disputes? The answer is B, to enforce real estate laws and issue licenses. The Nebraska Real Estate Commission enforces real estate laws and issues licenses, ensuring compliance with state standards for practicing real estate lawfully. What is the required minimum age to obtain a real estate license in Nebraska? Is it A, 16 years old, B, 18 years old, C, 21 years old, or D, 25 years old? The answer is B, 18 years old. The Nebraska Real Estate Commission requires applicants to be at least 18 years old to be eligible for licensure, ensuring basic legal capacity and responsibility. Which of the following is not a requirement for maintaining an active real estate license in Nebraska? Is it A, completing continuing education courses, B, paying licensing renewal fees, C, living within Nebraska, or D, complying with state real estate laws. The answer is C, living within Nebraska. License holders must meet continuing education and licensing fees requirements, but being a resident of Nebraska is not required for maintaining an active license. In Nebraska, which of the following actions can lead to the revocation of a real estate license? Is it A, failure to pay personal income tax, B, false representation of real estate services, C, using a cell phone during transactions, or D, not having a college degree? The answer is B, false representation of real estate services. Engaging in fraud or dishonest practices related to real estate transactions can lead to the revocation of a license under Nebraska law. What educational requirement must be completed to become a licensed real estate salesperson in Nebraska? Is it A, a college diploma, B, 90 hours of approved real estate courses, C, an apprenticeship under a licensed broker, or D, real estate sales experience? The answer is B, 90 hours of approved real estate courses. Nebraska requires prospective real estate salespersons to complete 90 hours of approved pre-licensing education, ensuring they possess foundational knowledge of real estate practice. Which of the following is required for an applicant to obtain a real estate broker's license in Nebraska? Is it A, completion of a 30-hour pre-licensing course, B, 3 years of active real estate experience, C, no prior experience required, or D, pass the basic state governing law test? The answer is B, 3 years of active real estate experience. Applicants for a Nebraska real estate broker's license must complete educational requirements and have at least 2 years of active experience to qualify. This experience ensures brokers are adequately prepared to oversee real estate transactions. What is the benefit of holding a temporary real estate license in Nebraska? Is it A, it allows unlimited transactions, B, facilitates transition during unforeseen circumstances, C, exempts holder from all continuing education requirements, or D, no need for supervisor approval? The answer is B, facilitates transition during unforeseen circumstances. In Nebraska, a temporary license is issued to maintain the continuity of business operations when a broker is temporarily unavailable. It allows licensed activities under limited conditions and for a short period.
If you're finding this helpful, please take a minute to like this video and subscribe to our channel for more practice exams, useful tips, and complimentary study sessions with Birdsy.
Nebraska Real Estate Commission. What is the primary function of the Nebraska Real Estate Commission? Is it A, to regulate real estate advertising in Nebraska, B, to uphold fair housing practices, C, to regulate and license real estate professionals, or D, to manage property taxes in Nebraska? The answer is C, to regulate and license real estate professionals. The Nebraska Real Estate Commission's primary function is to regulate and license real estate professionals, ensuring they adhere to state laws and meet professional standards. How often must real estate licenses be renewed in Nebraska according to NREC regulations? Is it A, every 2 years, B, annually, C, every 3 years, or D, every 5 years? The answer is A, every 2 years. In Nebraska, real estate licenses are renewable every 2 years as per NREC regulations to ensure that professionals remain updated on practices and maintain their credentials. What disciplinary action can the NREC take against a licensee for violating Nebraska real estate laws? Is it A, revocation of license, B, impose criminal charges, C, modify mortgage rates, or D, change zoning laws? The answer is A, revocation of license. The NREC has the power to revoke a license if a licensee violates Nebraska real estate laws, which is one of their key disciplinary actions to protect the public and ensure compliance. What is required for a real estate license applicant in Nebraska to demonstrate their competency to the NREC? Is it A, a college degree in real estate, B, passing a licensing examination, C, minimum of 2 years job experience, or D, sponsorship by a licensed broker? The answer is B, passing a licensing examination. To demonstrate competency, Nebraska requires applicants to pass a licensing exam administered by the NREC, testing their understanding of real estate laws and practices. Under what circumstances can the NREC audit a real estate firm? Is it A, annually for all firms, B, when a complaint is filed against the firm, C, at the request of the firm's broker, or D, never as firms self-regulate? The answer is B, when a complaint is filed against the firm. The NREC can audit a real estate firm if a complaint is filed, enabling them to examine compliance with regulations and standards as part of an investigative process. Let's continue with a review of Nebraska real estate finance. Loan fundamentals. What is a primary advantage of a fixed-rate mortgage? Is it A, the interest rate is variable, B, payments increase over time, C, payments remain consistent, or D, interest rates fluctuate with market conditions? The answer is C, payments remain consistent. A fixed-rate mortgage offers stability as the interest rate and monthly payments remain the same throughout the loan term, making budgeting easier over time. In Nebraska, what is the typical role of a deed of trust in real estate finance? Is it A, to transfer property ownership immediately, B, to act as security for a loan, C, to establish rental agreements, or D, to set property boundaries? The answer is B, to act as security for a loan. In Nebraska real estate finance, a deed of trust is a legal instrument used to secure a loan with property as collateral, involving a trustee, borrower, and lender. How is the loan-to-value ratio calculated in real estate finance? Is it A, by dividing the loan amount by the property's assessed value, B, by dividing the loan amount by the property's appraised value, C, by dividing the property's market value by the loan amount, or D, by subtracting the loan balance from the equity value? The answer is B, by dividing the loan amount by the property's appraised value. The loan-to-value ratio is a critical measure in real estate finance that assesses risk by dividing the loan amount by the property's appraised value or purchase price. What is the purpose of a loan origination fee? Is it A, to pay off part of the principal early, B, to compensate the lender for evaluating and processing the loan application, C, to reduce the interest rate, or D, to pay government taxes on the property transaction? The answer is B, to compensate the lender for evaluating and processing the loan application. A loan origination fee is a charge by lenders to cover the cost of processing a loan application, typically calculated as a percentage of the loan amount. What is the amortization of a loan? Is it A, immediate repayment of the entire loan, B, the process of spreading out a loan payment over time, C, the refinancing of a current loan, or D, an agreement to delay loan payments? The answer is B, the process of spreading out a loan payment over time. Amortization refers to the systematic repayment process of both principal and interest over the loan's term, ensuring the loan is paid in full by its end date. What is the primary function of a promissory note in Nebraska real estate finance? Is it A, to serve as a property deed, B, to outline terms for mortgage repayment, C, to transfer property ownership, or D, to insure the property? The answer is B, to outline terms for mortgage repayment. A promissory note is a legal document in which the borrower agrees to the terms of a loan. It outlines repayment schedules, interest rates, and any relevant terms, serving as a crucial document in real estate transactions. How does a prepayment penalty affect a borrower in Nebraska? Is it A, it allows refinancing without fees? B, it discourages early loan payoff? C, it is a form of property tax? Or D, it enhances loan interest flexibility? The answer is B, it discourages early loan payoff. Prepayment penalties may apply if a borrower pays off a loan earlier than agreed. These penalties protect lenders from loss of anticipated interest income, thus discouraging early loan termination. Loan types. Which type of loan is designed for low to moderate income borrowers and is insured by the government? Is it A, conventional loan? B, Federal Housing Administration, FHA loan? C, jumbo loan? Or D, U.S. Department of Veterans Affairs, VA loan? The answer is B, Federal Housing Administration, FHA loan. FHA loans, insured by the Federal Housing Administration, are popular among first-time homebuyers due to their lower credit score requirements and smaller down payments compared to conventional loans. What is a primary benefit of a VA loan compared to a conventional loan? Is it A, lower interest rates? B, no down payment required? C, no income verification? Or D, open to all U.S. citizens? The answer is B, no down payment required. One primary benefit of VA loans is that they often require no down payment for eligible military personnel, making home ownership more accessible while allowing lenders to accept greater risk with a VA guarantee. Which loan type is characterized by a requirement of private mortgage insurance with low down payments? Is it A, Veterans Affairs VA loan? B, conventional loan? C, balloon loan? Or D, Federal Housing Administration, FHA loan? The answer is B, conventional loan. Conventional loans often require private mortgage insurance if the borrower's down payment is less than 20% of the home's purchase price, mitigating lender risk for lower equity. Which of the following is a shared trait of both FHA and VA loans? Is it A, available to all applicants? B, government-backed? C, no credit requirement? Or D, no property appraisal needed? The answer is B, government-backed. FHA and VA loans are both designed to help specific segments of the population and are backed by the government, reducing lender risks and allowing more favorable terms for borrowers. What is the role of private mortgage insurance in a conventional mortgage? Is it A, to reduce interest rates? B, to insure against borrower default? C, to lower the required down payment? Or D, to provide tax benefits? The answer is B, to insure against borrower default. Private mortgage insurance protects lenders from borrower defaults on loans with lower down payments. It is a crucial element for conventional loans with less than 20% down payment, covering lender risks in lieu of higher equity. What distinguishes a conventional loan from other types such as FHA or VA loans? Is it A, conventional loans are insured by the government? B, conventional loans often require a higher credit score than FHA loans? C, conventional loans have no down payment requirements? Or D, conventional loans are available only to veterans? The answer is B, conventional loans often require a higher credit score than FHA loans. Conventional loans, unlike FHA or VA loans, are not government insured and usually have stricter credit and income requirements, making higher credit scores necessary. What is the main advantage of an FHA loan compared to a conventional loan? Is it A, the requirement for a larger down payment? B, exclusivity for veterans and military personnel? C. More lenient credit requirements. Or D. Avoidance of private mortgage insurance entirely. The answer is C. More lenient credit requirements. FHA loans are often chosen by borrowers with lower credit scores due to their more lenient credit qualifications and government insurance backing. Loan qualifications. In Nebraska, which of the following factors can disqualify a borrower when applying for a real estate loan? Is it A. High credit score, B. Low debt-to-income ratio, C. Insufficient income, or D. Long employment history? The answer is C. Insufficient income. Lenders in Nebraska consider factors such as credit score, debt-to-income ratio, income level, and employment history to assess a borrower's ability to repay a loan. Insufficient income is a critical factor that may lead to disqualification. What is one of the primary reasons a lender might require a higher down payment for a real estate loan in Nebraska? Is it A. The property is in a high-risk flood zone, B. The borrower has a high credit score, C. The borrower has a low existing mortgage balance, or D. The property is intended for personal use? The answer is A. The property is in a high-risk flood zone. Lenders may require higher down payments for properties in high-risk zones, e.g., flood zones, to reduce potential losses. This practice aligns with standard risk management procedures in real estate lending. Which of the following is considered a red flag during the mortgage underwriting process in Nebraska? Is it A. Regular timely payments on previous loans, B. Frequent job changes without salary increase, C. High property appraisal value, or D. Stable industry employment? The answer is B. Frequent job changes without salary increase. During underwriting, stable income and consistent employment are key considerations. Frequent job changes without corresponding income increases may suggest financial instability, posing a risk to lenders. How does Nebraska law regulate adjustable rate mortgages compared to fixed rate mortgages? Is it A. ARMs have regulated interest rate caps, B. ARMs require higher credit scores, C. ARMs have a fixed interest rate initially, or D. ARMs are only available for first-time homebuyers? The answer is A. ARMs have regulated interest rate caps. Adjustable rate mortgages in Nebraska are subject to state regulatory caps on interest rate increases to protect borrowers from sudden, excessive payment hikes, unlike fixed rate mortgages, which provide consistent payments throughout. What is a primary characteristic Nebraska lenders look for when qualifying a borrower for a conventional loan? Is it A. Low credit utilization ratio, B. High interest credit cards, C. Minimal savings, or D. Recently opened multiple credit accounts? The answer is A. Low credit utilization ratio. For conventional loans, Nebraska lenders prioritize a borrower's credit history, including a low credit utilization ratio, as it demonstrates the ability to manage credit responsibly without excessive borrowing. What is a key element lenders in Nebraska evaluate for borrower qualification? Is it A. Credit history, B. Appearance of the borrower, C. Popular opinion about the borrower, or D. Social media presence? The answer is A. Credit history. Lenders consider a borrower's credit history to assess their financial reliability when evaluating qualifications for a real estate loan in Nebraska. In Nebraska, what is the significance of a borrower's debt-to-income ratio? Is it A. Determines loan amount, B. Indicates borrowing history, C. Shows future job prospects, or D. Sets the property value? The answer is A. Determines loan amount. A borrower's debt-to-income ratio is crucial as it helps determine their ability to repay a loan, ensuring they aren't over-leveraged. The loan application process. Which of the following documents is typically required during the loan application process? Is it A, personal identification, B, property tax bill, C, home insurance policy, or D, employment contract? The answer is A, personal identification. Personal identification is a fundamental requirement in the loan application process to confirm the borrower's identity. This is a standard procedure to prevent identity fraud and ensure legal compliance. What is the primary purpose of a pre-approval letter in the loan process? Is it A, to guarantee the loan amount, B, to estimate the borrower's creditworthiness, C, to finalize the property appraisal, or D, to lock in interest rates? The answer is B, to estimate the borrower's creditworthiness. A pre-approval letter indicates the amount a potential buyer can borrow based on their financial status. It's a preliminary assessment and helps streamline the home buying process by providing financial clarity. What key factor does a lender examine during the loan application to determine an applicant's eligibility? Is it A, debt-to-income ratio, B, market trends, C, neighborhood crime rate, or D, local school quality? The answer is A, debt-to-income ratio. The debt-to-income ratio is critical in loan applications. It measures income against liabilities, helping lenders evaluate borrowing risk. A lower DTI indicates better capability to manage additional debt. Why is verification of employment crucial in the loan application process? Is it A, to establish job location, B, to confirm income stability, C, to determine employer policy, or D, to assess industry growth? The answer is B, to confirm income stability. Employment verification is critical because it provides proof of income consistency and stability, ensuring the lender that the borrower can meet loan obligations over time. What does the good faith estimate provide to the borrower during the loan process? Is it A, total loan amount, B, estimate of closing costs, C, future tax obligations, or D, repayment schedule? The answer is B, estimate of closing costs. The good faith estimate is a form providing estimates of the costs and fees involved in a loan transaction, enabling the borrower to make informed comparisons between lenders. What is a typical first step in the loan application process for a homebuyer? Is it A, find a suitable property to purchase, B, gather financial documentation, C, sign the purchase contract, or D, consult a real estate attorney? The answer is B, gather financial documentation. The initial step often involves gathering financial documents such as income statements and tax returns. This helps lenders assess eligibility. According to Nebraska real estate finance regulations, thorough financial documentation is crucial in establishing a buyer's borrowing capacity. Underwriting for Nebraska real estate. When underwriting a loan for a property in Nebraska, which factor is most crucial in determining the borrower's ability to repay? Is it A, credit score, B, number of dependents, C, proximity to schools, or D, season of property purchase? The answer is A, credit score. Nebraska's real estate underwriting heavily relies on credit score to assess repayment ability. It's a critical aspect evaluated by lenders alongside income verification and debt-to-income ratios. What role does a property appraisal play in the underwriting process for Nebraska real estate loans? Is it A, determining the buyer's creditworthiness, B, evaluating the collateral value, C, establishing the interest rate, or D, guaranteeing loan approval? The answer is B, evaluating the collateral value. In Nebraska, a property appraisal provides an independent assessment of the property's market value, thereby informing the lender about reasonable collateral value for security in the event of default. Which document is typically reviewed during the underwriting process to verify a Nebraska property buyer's income? Is it A, deed of trust, B, tax routes, C, property title, or D, closing disclosure? The answer is B. Underwriters in Nebraska frequently examine tax returns to confirm a borrower's income level. This documentation provides a historical view of earnings and potential loan repayment ability. How does the debt-to-income ratio influence loan underwriting in Nebraska real estate? Is it A, it assesses the property's market value, B, it determines the mortgage interest rate, C, it assesses the borrower's financial risk, or D, it establishes the final loan amount? The answer is C, it assesses the borrower's financial risk. In Nebraska, the debt-to-income ratio is crucial for understanding a borrower's capacity to manage additional debt. Lenders analyze this ratio to ensure borrowers can comfortably meet new loan obligations. What is a primary consideration for underwriters when evaluating a borrower's employment history for a Nebraska real estate loan? Is it A, stability and longevity at current job, B, total number of employers in the past 10 years, C, whether the employer is located in Nebraska, or D, industry type of current employer? The answer is A, stability and longevity at current job. A consistent employment history offers assurance of continuous income, a key factor underwriters in Nebraska regard. Longevity at a current job indicates lower financial risk for lenders by enhancing repayment confidence. What is the purpose of the loan-to-value ratio in Nebraska real estate underwriting? Is it A, to assess the borrower's credit score, B, to determine the appropriate interest rate, C, to evaluate the risk of lending by comparing loan amount to property value, or D, to calculate the borrower's monthly payment? The answer is C, to evaluate the risk of lending by comparing loan amount to property value. The LTV ratio is crucial in underwriting as it assesses the lender's risk by comparing the loan amount to the property's appraised value. A higher LTV suggests greater risk, affecting loan approval and terms. Loan closing. In Nebraska, who typically ensures that all contracts and documents are correctly executed during a real estate loan closing? Is it A, the buyer, B, the real estate broker, C, the closing agent, or D, the lender? The answer is C, the closing agent. In Nebraska, the closing agent, often a title company representative or attorney, ensures that all documents are executed correctly during the loan closing process, adhering to relevant regulations. What document is typically prepared and reviewed to confirm the correct allocation of expenses between the buyer and seller at a Nebraska closing? Is it A, deed of trust, B, settlement statement, C, purchase agreement, or D, promissory note? The answer is B, settlement statement. The settlement statement, also known as the closing disclosure, details the distribution of costs and credits between the buyer and seller and is crucial for ensuring both parties are charged and credited appropriately. What role does the title insurance play in Nebraska's loan closing process? Is it A, protects against losses from title defects, B, guarantees loan approval, C, determines the appraisal value, or D, sets interest rates? The answer is A, protects against losses from title defects. In Nebraska, title insurance is crucial during loan closing as it secures the buyer and lender against financial loss from title disputes, fraud, or other defects affecting property ownership rights. Under Nebraska law, which party is typically responsible for conducting the closing meeting? Is it A, the mortgage lender, B, the buyer's agent, C, the title company representative, or D, the seller? The answer is C, the title company representative. In Nebraska, the title company representative, also known as the closing agent, typically conducts the closing meeting, ensuring compliance with necessary procedures and documentations are completed accurately. During a Nebraska real estate closing, what happens to the earnest money deposit? Is it A, it is refunded to the buyer; B, it is forfeited to the seller; C, it is applied to the buyer's closing costs; or D, it belongs to the real estate agent as commission? The answer is C. It is applied to the buyer's closing costs. In Nebraska's loan closing process, the earnest money deposit is usually credited towards the buyer's closing costs or down payment. This ensures the funds are applied to the account prior to full transaction completion. During a loan closing in Nebraska, what is the primary purpose of the settlement statement? Is it A, to estimate future property taxes for the buyer; B, to allocate expenses between the buyer and seller accurately; C, to evaluate market trends over the past year; or D, to set the terms for future property improvements? The answer is B, to allocate expenses between the buyer and seller accurately. The settlement statement, often reviewed at closing, itemizes all charges for both buyer and seller. It ensures transparency and prevents disputes by clearly demonstrating how funds are allocated as per Nebraska law. Nebraska mortgage disclosure requirements. What is the primary purpose of the Nebraska mortgage disclosure requirements? Is it A, to provide borrowers with detailed information about mortgage servicing; B, to limit lenders' rights in foreclosure proceedings; C, to standardize interest rates for all mortgage loans; or D, to facilitate a faster loan approval process? The answer is A, to provide borrowers with detailed information about mortgage servicing. The Nebraska mortgage disclosure requirements aim to provide transparency to borrowers by detailing loan terms and obligations. This section ensures borrowers understand their financial commitments as per state law. Which party is primarily responsible for providing accurate mortgage disclosures in Nebraska? Is it A, the borrower; B, the lender; C, the real estate agent; or D, the Nebraska Real Estate Commission? The answer is B, the lender. Lenders must provide clear and accurate mortgage disclosures, as per Nebraska law, to ensure borrowers have all necessary information regarding loan terms and obligations. Within what time frame must lenders provide the initial mortgage disclosure in Nebraska? Is it A, within 3 days of accepting the loan application; B, within 1 week of closing the loan; C, within 10 days of a borrower's request; or D, within 24 hours of loan approval? The answer is A, within 3 days of accepting the loan application. Federal and state regulations require lenders to provide initial mortgage disclosures within 3 business days of receiving a complete application, ensuring borrowers understand their potential obligations early in the process. What specific information must be included in mortgage disclosures according to Nebraska laws? Is it A, interest rates and payment schedules; B, the borrower's credit score; C, property appraisal values; or D, the lender's internal policies? The answer is A, interest rates and payment schedules. Interest rates, payment schedules, and loan terms must be clearly disclosed to borrowers, ensuring they understand the financial commitments they are entering into according to Nebraska laws. What document typically details the mortgage disclosure obligations in Nebraska? Is it A, loan estimate; B, property deed; C, title report; or D, insurance binder? The answer is A, loan estimate. The loan estimate is a critical document required by federal and state laws, providing a summary of key mortgage terms that need to be disclosed to the borrower up front. What is required of mortgage lenders in Nebraska regarding the timing of disclosure documents before closing a transaction? Is it A, They must be provided 1 day before closing. B. They must be provided at least 3 days before closing. C. They must be provided only at closing. Or D. They must be provided within a week after closing. The answer is B. They must be provided at least 3 days before closing. Nebraska follows the federal TRID, TILA-RESPA Integrated Disclosure, regulations, which require lenders to provide the closing disclosure at least 3 business days before closing to ensure the borrower can make an informed decision. Which document is primarily used in Nebraska to provide borrowers with details of the mortgage costs? Is it A, loan estimate, B, promissory note, C, deed of trust, or D, title insurance policy? The answer is A, loan estimate. The loan estimate is a critical disclosure document provided within 3 business days of receiving a mortgage application, detailing anticipated loan costs and terms under Nebraska and federal law.
Thanks for joining us today. If you found this video helpful, subscribe to our channel for more practice exams, tips, and tricks. And don't forget to visit Birdsy.ai for complimentary study sessions with Birdsy, your AI-powered study partner.